Yo, welcome to another episode of Simply Bitcoin IRL. We're streaming, I'm recording live from Las Vegas, Nevada at the Real World Suite, courtesy of Tone Vase. I'm here at Unconfiscatable Day 2. And we have a very special guest for you guys today. We have Sam Callahan. Consider him a friend at this point. He's a Bitcoin analyst, and he is the author of the news block. So before we jump into the show, I do want to give a very special shout out to Simply Bitcoin's lead sponsor. It's what makes this show possible. Of course, I'm talking about Bitcoin Well. Bitcoin Well is the best place to build your automatic self-custody Bitcoin stack. So it's self-custody by default, which means that you can't even leave your Bitcoin on the platform. As soon as the funds clear, it goes straight to your self-custody Bitcoin wallet address, which perfectly aligns with the Simply Bitcoin ethos of the separation of money and state. To get started, go to bitcoinwell.com today and use promo code SimplyBTC. All right, everybody, no more delay. Let's bring Sam up on stage. How you doing, Sam? It's been a minute. I think the last time we saw each other, Opti, do you want to do the switching or should I do the switching? Thanks. So I think the last time we saw each other was in Madeira. So how's life, bro?
Yeah.
How's life in Bitcoin world? How's life in general? I miss you too. Your beautiful smile. I haven't seen it in a long time. So I hope all is well with you.
Same, brother. Yeah, I think Madeira was the last time, and man, I missed that place. That place is gorgeous. I hope Bitcoin Atlantis happens again. That was a fun time.
Yeah, but did you hear it? It's gonna be every 4 years. Did you hear that about that?
Oh, really?
Yeah.
Oh, wow.
Yeah.
That makes those experiences scarce. That's a scarce experience.
It's a scarce experience. It's a scarce experience. Yeah, man.
That place was fun. And we went to Porto afterwards. I don't know if you've been there, but that just gorgeous, like northern Portugal.
Mm-hmm.
And,
bro.
Good food, good wine. And so good Bitcoin too. Good Bitcoiners.
Really?
Yeah, man, everything's good. I've been working on different projects, just continuing to track the market, share my analysis. It's been a crazy ride, crazy year. A lot's happened. And also I call this the great sideways chop of 2024. I think that's how we'll remember it when we're old and drinking beers, talking about it. It's just been a wild sideways chop action, shaking newcomers out. But it's been pretty par for the course, in my opinion.
Yeah, it's we'll be in our citadels drinking the beers, talking about these moments. But yeah, I mean, it has been quite choppy, bro. Like 6 months of just you can call it sideways, but it has been kind of a downtrend. And it's been brutal. I mean, and I've been in Bitcoin 8 years, and these last 6 months were still pretty bad. So I think the question on everyone's mind is like, when is this going to end? And then I'm going to connect that with the FOMC meeting that happened today, where everyone was expecting a 25 basis points drop, but Powell just came in there and he just came in swinging. He's like, you know what? We're going to drop it 50 basis points. So Sam, what are your thoughts on this? Is this going to be bullish for the Bitcoin price? When's this consolidation going to ever end? Are we stuck at 58K till the end of time?
No, I think these rate cuts are kind of notable, but really the rate cuts have started from other major central banks for the last couple of months. You had the Bank of England, Bank of Canada, ECB, all start cutting rates. And now the Fed has finally followed. And, people will say that it's because of the weak economic data that has come in and they're getting scared and spooked about a recession. I think we all know what it's really about, and it's the fiscal situation. In August this year, the fiscal deficit increased 90 billion more than people expected. And over the last 12 months, we exceeded $2 trillion. And that's when the unemployment rate is still at historically low levels. And the economy is kind of like trucking along. There's some weak data points here and there, and it's scaring people. But nothing's terrible right now. And there's a lot of green shoots in the economic data as well that doesn't get a lot of attention. So you got to ask yourself, why is Jerome Powell coming out now and cutting rates, not 25 basis points, but 50? And I think it's because the fiscal situation. I mean, look at the interest expense. It's getting ridiculous. And, pretty soon, Luke Groman shared a chart that interest expense is going to outpace defense spending. And if they refuse to cut entitlements because of political issues, and just difficult to do, right? As well as defense spending in a period where geopolitical tensions are rising, well, what can they control? Well, they can control the interest expense, and they can do that by cutting rates, right? And so I think that's what this is really about. And it just points to the real driver of inflation as well, which is the government spending and the fiscal side of the equation. And what's interesting is that interest rates, I mean, come on, it's when the debt gets to these levels, this is the fiscal dominance where interest rate policy actually becomes pretty ineffective, both at stopping inflation and then arguably at stimulating it, because a lot of people locked in really low interest rates at fixed, 30-year mortgages, or corporations termed out their debt to 2030, 2032 at low interest rates. So honestly, like, I don't really see how cutting rates is really going to impact economic activity that much, unless it gets to like, below 3.5%, or really maybe after a few rate cuts, maybe we start to see some stimulative activity to the economy. But just one cut here and there, like, I don't really see how that's going to stimulate things, given how much people have these like long-term fixed debt at really low rates from the last 10 years.
Yeah, and it's the what fascinates me the most, Sam, and Lynn has done incredible work on this. You have done incredible work on this. James Lavish, I think, coined the term the debt spiral, something like that. Clearly, this is unsustainable. But when do things break? Because it seems like us Bitcoiners have been like, this is absurd. They're printing records amount of money. Like, this is ridiculous. There's no way they can keep this up. But it always just seems like they can keep kicking that can down the road. Like, when will things get to a point where just the interest on the debt alone it gets to levels where it causes instability, politically, financially, for the country? And then what are the implications for that, for the world? Because the U.S. is the leader, really. So when's this going to end? And I mean, there's no way you know the answer to that, but
I mean, yeah.
let's speculate, right? Because it just seems like they can just keep doing this endlessly.
Well, that's the privilege that you talk about, being the global reserve currency. You can definitely do this for longer when you are that. And you asked like when this breaks. I think there's a couple of different ways that could happen. One is that countries in this global economy, in this global dollar reserve system, basically say enough is enough, and they start to ditch the dollar for alternatives, and they stop buying our debt. That could be really troublesome, right? Because we have to keep the charade going. We have to keep issuing more and more debt. We need to find buyers of that debt. And I guess that goes down to, if we lose control of the longer end of the yield curve. So if we see interest rates on the long end start to really soar upwards because there's not enough demand for them and nobody's buying them, obviously that's going to increase a lot of interest expense as well. And so that's problematic, because something the Fed can do if nobody's buying the treasury bonds. And then,
I mean, but isn't the Fed buying the treasury bonds themselves? I mean, technically,
then you become Argentina, right? So then
Mhm.
you do the Argentina playbook, where you just monetize the debt with the central bank. And then when it breaks is when people lose faith in the currency completely. That's the ultimate breaking point, is when people just completely lose faith in the currency. Which, I mean, I'm not even going to try to guess when that would be. But you asked me when this all breaks, that would be the case. Now, it doesn't have to be a complete crash or a break. There are more optimistic paths out of these high debt levels, which one of them being productivity miracles brought about by, technological advancements. Bitcoin might be part of that. And so that's the more optimistic view. They could also stop spending. That's not going to happen, as the deficit just keeps going up. So, if they did any kind of austerity at this point with the leverage in the system, it would be extremely painful, extremely painful, but that would kind of at least really slam the brakes on these things, these developments. Or they could let inflation run high, and then it's a balancing act. So if they let inflation run, how much can the public stomach that, and for how high and for how long before there's more like civil unrest and things like that. So there's various outcomes here, different paths forward. I like to think Bitcoin's a part of the solution, and perhaps its ability to allow people to save in a money that can't be inflated, which leads to more investment and economic growth and more innovation. Having a monetary technology could help spur other innovations and inventions because we're able to save and invest for long-term projects and innovations. That's kind of a long-term outlook. It's definitely, when you look at the debt situation, it's definitely dire. It seems like it's baked in the cake. As Stanley Druckenmiller says, the time to look at the entitlements and start to restructure things was like yesterday. And so it's definitely, there's a lot of issues on the horizon, and I think people are starting to become more aware of it in the mainstream media, as well as even large financial institutions like the IMF, World Bank. Jerome Powell himself, he got the Fed chairman himself saying it's unsustainable. I mean, that's extremely notable. Usually it was just Bitcoiners and gold bugs slamming the table about this like 5 years ago. And now after COVID and all the money printing that happened, now everybody's kind of aware, like, this is a problem.
Yeah, and you said something earlier that I kind of wanted to talk about, because you said that Bitcoin could potentially Bitcoin could potentially be one of these things to solve this problem, to solve this issue. Which brings me to at Bitcoin 2024 in Nashville. After the Trump speech, a lot of people felt different ways about it. I think the last thing that he said is like, "Have fun with your Bitcoins." But shortly after, Cynthia Lummis came on stage and she presented the bill. And
Yeah.
she was basically making the case that if the U.S., adopts Bitcoin as a strategic reserve asset, that could potentially be one of the mechanisms that they could use to pay off some of the debt. What are your thoughts on that?
Yeah, I mean, I think about like how they're going to afford to buy all that Bitcoin. That's one thing, because in the bill, the interesting part about the Bitcoin bill is it gives different ways to buy it. One of them was like to revalue gold, their gold holdings, which was interesting. And then the other one was like to use the basically like the operating income from the Federal Reserve to buy the Bitcoin. But the funny thing is that the Federal Reserve has been running at a negative operating income for the past couple of years because it raised interest rates, and all the bond it hold actually lost a bunch of value. And then they have to pay out the higher interest on all their reserves to the banks. And so they've been insolvent basically for the past couple of years. And the Bitcoin bill said that that's where they're going to get some of the funds from the Fed. And I was like, that's not going to happen anytime soon. So that's the first thing I think about. But yeah, obviously holding Bitcoin could improve the balance sheet of any entity that adopts it, whether that's an individual or a corporation or a government or a nation state, right? And so obviously I would support that endeavor, because when you hold the hardest money that appreciates in value over time, I would want my country to own a lot of it. And I think that'll improve the financial outlook for the country. How do we get there? That's another question. But it's extremely surreal to see that. I was actually front row at that Trump speech, because I just thought it might be like, it was just an interesting development, right? Former president talking at a Bitcoin conference. It was so surreal to see him saying, he was like, "Oh, these Bitcoiners have such high IQs, these Bitcoiners,
It,
fun playing with your Bitcoin." Like, I was just like, I don't even know what this is, but it's kind of funny and also really crazy to see. And then everyone left, and then Lummis comes out and he says that bill, and I was like, wow, that's crazy. Like, I never thought I'd see that.
It's
I don't know.
curious.
What did you think? Yeah.
It was curious, the political maneuvering. So like RFK, I don't know if I could say this. Let's just say that RFK spoke to very influential people in the community a couple days before he gave his speech. He set the bar so high that when Trump came on, it didn't even come close to RFK's speech, right?
No, that's a
And
great
it,
speech.
and I think a lot of people were disappointed with Trump's speech. But if you break it down, like RFK has the ability to be a little bit more extreme because he's from an independent party versus Trump is coming from a mainstream, party, the Republican Party, and he actually has a chance of winning the presidency. And I was about to walk because I was also like kind of in the front row too. I kind of regretted it as also, Sam, because I had a choice to either be at the news desk, and that was like the highest amount of current live stream viewers. And Germano's like, "Hey, do you want to stay here?" I'm like, "No, no, no, I'm gonna go watch Trump speak." And then I came to the realization after that was like when there was like 50 or 60,000 people watching live. I was like, I'm gonna go watch Trump's speech, and I was quite disappointed. I was like, this isn't
Yeah.
what RFK was doing. And I was about to walk out until he mentioned, because 80% of the speech was political rhetoric, shitting on Kamala Harris and Biden, and then 20% he would drop little nuggets. So like the whole crowd, like, I'm gonna fire Gary Gensler, and everyone's like, yeah, and he's like, oh, you guys really like that? I'm gonna fire Gary Gensler, right? And the crowd went wild. But I was waiting for him to say, yes, this is gonna be a strategic reserve asset. He said that. I was like, in the grand scheme of things, I think it was successful, but I think it was very symbolic that it was Cynthia Lummis that came straight after the fact, and she was the one presenting the bill. Because where RFK fell short is that even if RFK implemented those policies via executive order, as soon as he left office, they'd be gone. So I think the correct way of approaching it is via legislation. And I think what they did with the Trump speech and then with Cynthia Lummis coming shortly after was very, very clever political maneuvering. That's my whole opinion on that. And
Yeah.
I wanted to ask you about the this is a very, very important election. I just kind of want to show this. You earlier, Sam, you have literally Trump at the pub key bar in New York. This is
That
hilarious.
is insane.
I can just imagine his voice like these are the bitcoins. Anyways, can't do a good Trump impression, but you have you have two political candidates in front of us, right? You have Kamala Harris / Biden that are anti-Bitcoin, pro CBDC. And then on the other side, you have Trump, which is pro Bitcoin, anti CBDC. They've made it part of the official Republican Party platform. And then the Democrats have not. So this election will have implications for the regulatory environment for the Bitcoin industry in the United States 2024 onwards. And I think a lot of people don't fully appreciate that. But I want to get your thoughts on that, man, because there's a lot of things that were happening. Operation Choke Point 2.0, Caitlin
Yeah.
Long's denial of the federal banking charter for her bank, Custodian Bank, the attack on self custody. You did an incredible job exposing the Elizabeth Warren Wall Street Journal. Hamas raised millions of dollars
Jeez.
using Bitcoin. It turned out to be bullshit. You did great work with that. So you get what I'm saying. Like, there's been an onslaught on the industry by the current administration, and you have another party essentially proposing an opposite stance on the industry.
Yeah, I think it is an important election, unfortunately, because as we both know, Bitcoin, I think, is a bipartisan issue. There's reasons why both parties should like this technology. It's just a technology. But one side has really been hostile towards it over the last couple of years. There's no doubt about it. Now, I think Trump said that Bitcoiners have high IQs. I can totally see that he's pandering to this base. I mean, I don't think he's like, I think RFK was less pandering and he actually better understands Bitcoin. But it does seem like the Trump administration and the Republican Party more broadly has been more pro Bitcoin. And it's a shame to see because, like I said, both parties should be pro Bitcoin. There's really no reason to be anti Bitcoin. And so I think it is a meaningful election because we saw what could happen when the wrong people become the leaders and misunderstand this technology and how they can kind of create barriers to access and on ramps and off ramps and onerous regulations and who they appoint as the regulators. Now, there are some developments with like the Chevron case where these regulators theoretically they're not going to be able to unilaterally create some of these like rules anymore, and so that would be basically it takes power away from the executive branch to and gives power to the legislative branch, which is a positive, right? So if the Democrats do win and they are still very hostile to this industry, I hope that's not the case, but if it is the case, then um, because of this new ruling, then I don't think they're going to have as much power because the people they appoint as the regulators and put in those positions won't be able to like unilaterally just slap down these ridiculous rules, such as like SAB 121. That's a perfect example of one of these rules that bypass any kind of comment period or congressional hearing or anything. There was no input, and they just slapped down this rule, which basically prohibited banks from custodying Bitcoin, right? And so I am kind of optimistic for that case because it kind of puts a cap on some of the executive branch's power. And but yeah, I think you're right. I think this is kind of a meaningful election. I think I think we'll look back, and if the right people do get into certain positions, it could really accelerate things. And I think right now, though, it's kind of seems like the momentum on Bitcoin is just so crazy with like the institutional uh, adoption and just the broader awareness of what Bitcoin is, and as an investment as well as the technology. It seems like things are really hitting like its stride, and I don't even think that if we do get it would have to be like a sweep of the House and the Senate and the executive branch for me to actually get really worried about like stopping Bitcoin, not stopping Bitcoin, but like hindering it significantly. But even so, I'm like, even if they do win, I don't think they would win the Senate and the House too. And then it's like, even then, I think Bitcoin's going to keep just charging along. I think at this point, things are going to accelerate. And when you have like the largest financial institutions and some of the smartest investors and politicians new politicians just keep coming up that are pro Bitcoin and really understand it, it's like toothpaste is out of the tube.
100%. And no, you see that, right? Of course, BlackRock going into it. You have came out that Goldman Sachs had exposure to the ETF. It came out that Wells Fargo had exposure to the Wisconsin Pension Fund, the BNP Paribas, the French bank, the second largest bank in Europe. Not to mention, like, I think it was more than half of the largest hedge funds in the United States. They all have some type of exposure to Bitcoin. It came out that I think it was the Central Bank of Norway had exposure to Bitcoin via I think it was through MicroStrategy. It wasn't the ETF, but you're absolutely right. It's you have this massive institutional interest. But Sam, why isn't the price going up, bro? Like, this doesn't make sense. Like, you have all these institutions coming in, like they're gobbling up all this Bitcoin. They're buying more Bitcoin than is being mined and sold on the market on a daily basis. Like, why are we chopping sideways? Is this the curse of 58K into infinity? What's going on?
I mean, I don't. I just think like Bitcoin's up like 125% over the last 12 months. It's pretty good. Pretty good. I think people really get they sucked in, and yes, it can feel choppy and sideways, but that was a pretty good run up. It's actually pretty healthy to have some consolidation, to take a breather. for a long-term bull market, to kind of gather steam again and then charge upwards again. I think this is kind of normal. It's kind of par for the course. Now the length of this is a little bit different. It hit a previous all-time high and then it kind of dropped back down from that. Now it's been like hovering, around that range. You saw that in previous cycles, but nothing as long as this one. And I think this is related to liquidity conditions going sideways around the same time. I think Bitcoin's very closely correlated to global liquidity, and which is why like these rate cuts I think are notable, because when you have like a rate cuts, weaker dollar, you got some of these other dynamics with like the reverse repo draining. These things are all like liquidity. It's like the Fed is getting ahead of like liquidity getting tight again, so they're trying to like ease it again. So I think this is good. I think you're seeing global liquidity start to like creep up again, and so yeah, I'm kind of bullish. I think these rate cuts and if global liquidity does creep up, then it's like game on for Bitcoin. It is the fastest horse when it comes to its sensitivity to global liquidity.
100%. So, Sam, and you're an analyst, I'm sure that this popped up on your radar. BlackRock released a report today called Bitcoin a Unique Diversifier.
Yeah.
Were you able to check it out?
Yeah, a little bit. It was pretty crazy, dude. It might as well have been like it's like
written by Maxis, right?
Like, quotes and then have like Bitcoiner and then strike it out and put BlackRock underneath it, because I mean I have it in front of me here. This is like, they say, we believe that Bitcoin via its nature as a global decentralized fixed supply non-sovereign asset has risk and return drivers that are distinct from traditional asset classes and that are fundamentally uncorrelated on any long-term basis. I'm just like, yeah, it's pretty good.
I think you just said that we're winning. That's what I got from your statement.
I mean, it's wild to see.
BlackRock. I didn't see that. Thanks, Opti, for pulling that up. Oh my god, that's hilarious. Yeah, maybe they will. I do find it curious that they dropped the whole ESG thing as soon as they pushed out the Bitcoin ETF. No, but I got some questions in this regard related to that report, Sam. So, I mean, because it is a huge deal, right? So, a lot of that report comes to like my first question to you would be, it mentions Bitcoin's role as a portfolio diversifier. How do you see this changing traditional portfolio strategies, specifically for institutional investors?
Well, I think you got to understand how portfolios have been constructed over the last, say, 20 years, which is it's all based off this underlying relationship between bonds and stocks, right? So, and it's really related to the Fed and the central banks who come and intervene whenever markets drop. So when stocks fall, the Fed comes in and cuts rates, which is good for bond prices. So bonds have acted as this buffer for any time stocks have started to tumble. And so you combine them in a portfolio, and that's how you reduce risk, but then you have good risk adjusted returns, right? So it provides that diversification because they move a little bit differently. Now, the problem is that relationship, that inverse relationship between bonds and stocks, it changes in inflationary environments because bonds don't do well in inflationary environments. And so historically, you see when inflation comes up, you start to see that correlation start to become positive. And that's a problem for the way portfolios are constructed. And so what you're seeing in like the institutional investor world, looking at family offices or other investors, is they're all seeking alternative assets, anything to provide that diversification that they're not going to get anymore from bonds, trying to hedge their equity positions with, it could be anything. It could be gold, collectibles, actual real estate. But then there's Bitcoin, and Bitcoin has been shown to be has low correlation with basically every other traditional asset class. And that's what BlackRock is talking about here. And that's why, they're speaking the institutional investor language. This is what they want to hear. They're like, oh my gosh, an uncorrelated asset. This is like the holy grail of portfolio construction, to find something that not only outperforms, has a really good return profile, but does it in an uncorrelated way. That's really attractive. And so when you have a really high return profile, you can actually have a little goes a long way, which is also attractive for these people because it might be a little scary. But even if they own a little bit, it can really change the like return profile or the risk adjusted returns of the portfolio. So that's kind of what BlackRock's talking about, and makes a lot of sense. It's why like the Wisconsin pension funds going into it, right? They don't need to go into it a lot. But it's funny because when you actually run the numbers, the bigger the allocation, the better it gets actually in terms of risk adjusted returns. But right now we'll be okay with like a little bit here and there for these big fishes.
Absolutely. Do you believe that Bitcoin's long-term uncorrelation with traditional assets will continue, or do you foresee like it aligning more closely with other risk assets moving forward?
It's a good question. That's a really good question. You know what's interesting is if like what happens when a majority of the S&P 500 companies own Bitcoin on their balance sheets, like MicroStrategy. You know what happens there, or like even over a long enough time frame. If we're right, then the companies who adopt a corporate treasury strategy before the other companies are going to outperform their competitors. They're going to get larger market caps. They're going to be able to. They're going to have more of a robust balance sheet to make acquisitions, acquire their competitors. They're going to become most of the S&P 500, and then they're going to own a lot of Bitcoin. So you would think that their prices would start to track Bitcoin, or at least become a little bit more correlated over time. I could see that happening. Yeah, I think equities is the interesting one in terms of like gold and. I think gold is kind of the low-hanging fruit with Bitcoin, where it really does improve on a lot of gold's shortcomings. And so it makes sense to me. And like there's a lot of overlap between the narratives, right? Between gold and Bitcoin right now. And I think a lot of gold investors might take a little bit chunk of gold and buy a little bit of Bitcoin with it. And so I don't really see how those would be that correlated. And over time, over long periods of time. Bonds, not so much. Bonds are just would not own bonds.
I don't know why anyone would. And then specifically now that Bitcoin's a thing, right? Like I think governments are going to have a very difficult situation in the future trying to sell these things. It just doesn't make sense in my opinion. Then let's see how that happens. But anyways, I did want to ask you a question. I did want to ask you a question, Sam, which is like, and forgive me for my Miami pronunciation of the company's name, but you have Michael Saylor literally putting his graphics, and MicroStrategy is outperforming NVIDIA. Okay, like in what world would that happen? But it's what you were saying. It's the mere fact that MicroStrategy has adopted a Bitcoin strategy and has Bitcoin on its treasury. Now all of a sudden it's benefiting from it, and that doesn't require such an extreme measure from other companies. Like if you're Apple or if you're Google, you have a tremendous amount of cash or cash equivalents that are literally just sitting there like melting ice cubes. I think the first, company that just goes in there and says, you know what, maybe we're not going to go as ham as Michael Saylor. Maybe we put in 5% or 2% or 3%. Not only are they going to maintain their purchasing power, but also now they're going to have a major competitive advantage compared to any other company that doesn't do it. Yeah. And what's really interesting as well is, as much as people hate Elon because the whole Doge thing and whatever, both his companies, Tesla and SpaceX, have about roughly a little bit less than 10,000 Bitcoin each. So I find that quite interesting because that isn't just a pure Bitcoin play. Like Tesla is a very successful car manufacturer, and they do have a sizable holding in Bitcoin. So when do you think that's going to happen? Like, who's the first domino to fall? Is it Apple? Is it Google? Is it Meta? Do you agree that it gives them a competitive advantage compared to companies that don't put Bitcoin or replace some of their cash reserves with Bitcoin?
Yeah, I mean, just like an individual who adopts Bitcoin has a competitive advantage over somebody who doesn't over long periods of time. Life is getting cheaper for Bitcoiners. Life will get cheaper for Bitcoin companies as well. It's like it's the age old, you can't protect yourself from somebody else adopting a harder form of money. So it's the same thing. And I think River put out a great report. They said even a 3% allocation to Bitcoin with 97% cash would protect them against inflation, given Bitcoin's return profile. So, like I said, a little bit goes a long way for these corporations. So, it's kind of a no-brainer, but I think it's a big paradigm shift in how these corporate treasurers think. I think we're still in the early days. And I think it happens on the margins. I think it's kind of like what we've been seeing, which is smaller companies like the Semler Scientifics, One MedNet, um, brought up MetaPlanet. Yeah, I think that's what we're going to see. These kind of like companies come out of nowhere who are Bitcoiners who are just like, yeah, this makes sense. We're going to do this. And then there will probably be like a white swan moment. Who knows, like a Michael Dell situation or, one of these big companies that comes in and that's going to make headlines. And that's going to be a really interesting moment. But yeah, it's just kind of a no-brainer, and it's really a function of the macro environment. It's like what we said, there's so many reasons to believe that we are entering a regime change in terms of the macroeconomic environment, where the past 30 years we've been in this deflationary environment where rates just continuously fall, inflation is low, and now it just seems like things are changing and we're entering this structural inflationary period where every single entity that has to deal with money, whether it's a corporation, an investment firm, money managers, individuals, are going to have to rethink how to preserve wealth and build wealth in this new environment. It's been decades and decades and decades of the same thing. And now it just seems like things are changing. And so, yeah, the companies that lead and who are forward thinking and who have the ability to adopt a Bitcoin treasury strategy before others, I think will absolutely have a competitive advantage.
100%. And how do you think the increased institutional adoption of Bitcoin will affect its price stability and long-term value? Because it's a little bit different now, right? It's not just a bunch of hardcore Bitcoin maxis that are holding the majority. I think that is still the case. I saw a graphic by River that showed that I think 11 million out of the 21 million Bitcoin are still held by individuals, which I think is very positive. But
Yeah, that's good.
how do you think it will affect the volatility now that you have these large institutional players coming in? Is it going to increase the volatility? Is it going to decrease it? Is it going to stabilize it over a long period of time? I mean, I'm assuming what's going to happen is you have these portfolio allocations of 1-2%. Then Bitcoin performs very well, becomes 5% of the portfolio. Then they have to reallocate the portfolio. They have to, that causes downward sell pressure. So, what's your take on that?
Well, I think it could definitely suppress, not like just reduce volatility over the long term, but you got to understand that rebalancing effect happens on the way down as well. So if
Mm.
Bitcoin drops, then they'll actually come in and buy. So they'll kind of create that floor on the other side too. And usually these money managers understand, uh, not to panic sell. I guess, nothing against the retail investor. It's just, I guess you could say they're more sophisticated investors, or the investor base is different, where you have like pension fund managers with very, very long time horizons who aren't going to panic and sell off their entire position. And they will be rebalancing on the way down too. Same with corporations. If you just like have a cash flow positive business that's like non-cyclical, just durable cash flows, profitable, they have a treasury strategy they're going to put X% of their net operating profits in every single quarter. It's like clockwork. It's like a price insensitive buyer DCAing at a massive level. That's that's a good thing. And we see it with Block and Tether right now, where they're putting in a percentage of their operating profits into Bitcoin, and that's insane. And think about if that happens on a much larger scale. The similar strategy starts to get adopted by all kinds of businesses and corporations. So I do think the volatility will decrease with adoption. I think that's actually what we've seen when you just look at intraday or intraday volatility. It has decreased over time, and I think we'll continue to see that with adoption. I do believe in the law of large numbers. It just makes sense where we might not see these like crazy returns, but at the same time, we are so early that the opportunity is still incredible, in my opinion, with how little adoption there actually is right now and how the institutions are just getting their toes wet here. I still think we have a step function upwards in price appreciation ahead of us before we get into these more like modest returns. And then even then, I still think it like outperforms, say the S&P 500 or something, just because of its properties and its scarcity and all the things that we know as Bitcoiners. But yeah, I think the volatility would drop. I think it's kind of natural as adoption grows. I think the institutions bring a different investor base into the game that's less like speculative in nature and just more have long-term theses. Won't panic sell the bottoms. Yeah, I think that makes sense, right? Do you think that too?
Absolutely, it 100% makes sense. And and that's actually one of the questions that I had for you, which is the idea of diminishing returns. And the law of large numbers goes into that, right? It's a lot harder for Bitcoin to go from 60K to 120K than it was for it to go from 1K to 2K. Requires a lot more, kind of capital going in. But you said something that interested me, which is this idea that we're still early. There's still a tremendous amount of opportunity.
And
So could you elaborate a little bit on that? Because I think a lot of people, especially specifically at these price levels, they might see it as, wow, we missed the ship. Like we missed this. What would you say to those people?
I mean, it's just so early when it comes to like I said, the institutional adoption of Bitcoin. It's going to like think about the companies that have bought it now. It's just been like this couple small companies, MicroStrategy. You brought up Tesla, which I honestly, it's funny with Tesla and SpaceX because people, and just a little side note, but people give Elon a lot of grief because he sold. But he said on Spaces that he sold because he needed the money because of like, his operations. And so he just needed the money. He didn't say he wanted to sell, and he didn't sell 10,000 Bitcoin. He still hasn't sold 10,000 Bitcoin. So I think that's notable. I think he was just running a business, and unfortunately he had to sell his treasury reserve asset to fund his business. And so I just wanted to point that out. But anyway, we're so early because think about how many more companies have the same problem. Everyone has the same problem. We have U.S. public companies have $3 trillion in cash and cash equivalents. When you bring that out to businesses, not just public companies, but businesses, that's $7 trillion in cash. All have the same problem, which is they suffer from currency debasement. And they're all going to eventually find the solution, which is Bitcoin, in my opinion. And that's just corporations. You think about nation states, obviously, you can go to that level. Think about pension funds. We only have 2 state pension funds having very, very small allocations. You have Michigan and Wisconsin. All these pensions are really in trouble when you look at how underfunded they are because of the low interest rate environment over the last 10 years. And they're going into leverage, they're going into hedge funds, they're going into private equity because they're all looking for outsized returns that are uncorrelated, exactly what BlackRock's talking about. And they have a lot of money. They have trillions and trillions of dollars. Endowments. Endowments are a little bit more flexible than pension funds. There are endowments that have been in Bitcoin for a while, but not all of them. And they have a ton of money as well. Sovereign wealth funds. We don't even know if they're already allocated but my guess is a majority are not. Ton of money there. And so it just goes on and how early we are. We really are in this like retail phase, or maybe exiting out of the retail phase into the institutional phase of Bitcoin. And so, yeah, there's a ton of opportunity ahead of us. Will the volatility go away? Absolutely not. It's going to be diminished, but not go away. People still love leverage, and Wall Street definitely loves leverage. So expect the leverage to continue in these bull markets. You'll probably get some similar drawdowns, maybe not as intense as before, but volatility will continue. But yeah, the opportunity's there, and that's why the volatility's there. If the opportunity wasn't there, then there wouldn't be as much volatility. So yeah, that's kind of how I see it.
100%. I do agree with you. I think volatility is an opportunity. It's not. It's Mahler's, I think, puts it best. It's a feature, not a bug, right? What did you think of Saylor's? And it's so interesting because first of all, he's vindicated. He paid his price of tuition. We were there together. I never forget him. Bitcoin, Pacific Bitcoin 2021, and he was sitting in the front row, and it was we had a great time, and the price of Bitcoin was at 16,000. So
Yeah.
and MicroStrategy's average price was like at 32K at that point. And he was not smiling in interviews, my friend. And he was paying his price of tuition. He was like the rest of us have to. And now he's been vindicated, and he looks like an absolute superstar. So I
He
guess
never. I don't think he ever lost faith in Bitcoin, though. I think like all of us. I think
none of us have, but the
yeah,
pressure, you get the messages from your parents, like, are you okay? Like, why is Bitcoin going down, et cetera, et cetera. And could you imagine just the shareholders and billions of dollars? Because it's like, yeah, okay, fine, Sam, you and I both got in earlier than Saylor, but we also didn't have billions of dollars of purchasing power to just acquire this massive amount of Bitcoin either, right?
yeah. And we don't have
So
the heat. We don't have the heat on us like he does. Like
yeah,
there's a time cover piece. Do you remember that at the bottom
uh,
of the bear market?
I
Forgot what
had,
it said, but it was him, and I forgot what the title was, but it was making fun of him for the Bitcoin strategy
yeah.
in 2022. And
Yeah.
no, that's going to be a fun thing for him to look back on now.
Yeah, I hope he frames that. But now he's smiling. Now he's wearing Bitcoin logos on TV interviews. I feel like his beard has gotten slightly longer. And he's been vindicated. He did an interview. I'm sure you saw it, Sam, Squawk Box,
Yeah.
and he was doing his victory lap. But anyways, this leads me to the question, which is, he had it's Opti. Has it pulled up? Thanks, Opti. Wow, coming in hot. There
Wait,
it is.
I got it was the Wall Street Journal in August 2022. Michael Saylor bet billions on Bitcoin and lost. And it's a picture of him holding the Bitcoin symbol.
Let's see if we can find that, Opti. But yeah, and I would say his prediction, because it always has to be like a one up, right? At the Bitcoin conference, surprised the F out of me. It was gnarly. Bear 21 year, but here it is. Thanks, Opti.
Yeah, that didn't age well for the Wall Street Journal.
That did not age well at all. Wow. Absolutely wrecked. Okay. I feel bad for that author. Paul.
Oh, that guy's been a long-term
Hater.
Bitcoin bear. Yeah, he's been a hater.
Oh man.
He's got a whole chest of articles that haven't aged too well.
He's got to eat his words now. But anyways, so Saylor at the Bitcoin conference in Nashville predicted his 21-year prediction. The bear case was $3 million Bitcoin. The bear case was 3 million. The bull case was 13 million, which is above Hal Finney's $10 million prediction. But what struck with me was the bull case, which was $49 million Bitcoin. which was absolutely insane. What were your thoughts? And by the way, before, because it doesn't do it justice just saying the predictions, the way that he described Bitcoin as an asset prior to making the predictions, thanks Opti, um,
Yeah.
was superb. Like the way that he described it. So, what are your thoughts on this? Is this too bullish? Is it too conservative? He's saying that Bitcoin could reach 7% of total assets. Is that even possible? The bear case is 2%. I would be quite disappointed if Bitcoin were only at $3 million 21 years from now.
Yeah.
Um, so I think we would be in our 60s or their 50s or 60s, Sam. So yeah, what's your take on this?
Well, I think one of the cool things he did was he open sourced this model, Bitcoin 24, so
Hmm.
that you could play around with it and put in your own assumptions. And so I thought that was really cool because you can actually do that and play around with how he got to this number. But it's really this idea like the total addressable market where Bitcoin's going to eat, some of the value of these different stores of value and different assets that basically are being used as money right now. But his point was that they're not good forms of money. There's problems with that. And he used a really clever uh, equation, which was the lifespan of the asset equals the value of the asset divided by the maintenance costs, and how there's different maintenance costs for all these different assets that are currently being used as stores of value that Bitcoin doesn't have because of its digital nature and because it's the best form of what he calls digital capital. And that's it's really a paradigm shift. And I love that framing because it's, you know, when he threw out those numbers of like, a yacht has, last 6 years because of all the maintenance costs. I learned from some conversations that there was like real data behind every single number in that presentation. And so that wasn't just like throwing them out there. Like they really looked at like the different lifespan of these assets. And the idea was like, yeah, you could do a mutual fund and it lasts like 100 years. And that was like one of the best ones, right? Best options. But then like fees eat it away. But Bitcoin could last thousands of years, right?
Yep.
Because of all of its properties. And so it's hard, when you try to predict out even even next year in the next 5 years, it's difficult to project, but to try to project out in the next 21 years is very, very difficult, especially when you're dealing with a technology that can be adopted in exponential fashion because of like the network effects and things. So it's hard to tell. I think I think the one that I would put the least odds to would be the 3 million one, the bear case, maybe
I
just because it's
agree.
bullish.
I'd
Um,
be highly depressed if that were the case. I'd
yeah, I'd
be
be very surprised. I mean, at that point, I'd be like, what happened a little bit? 21 years and at 3 million only. And I think it's hard for me to see that number too, because there's another side of this equation, which is the fiat currencies and how much debasement will happen. And you always got to think about that of, what those values are being denominated in and how much 3 million is going to be able to buy you in 21 years, given the rate of currency debasement. And people throw out that monetary supply is growing at on average 7% a year, the M2. But I wanted to run the numbers of what that was like over the last 4 years or 10 years and 20 years. My I mean, my guess would be that it's much higher than 7%, at least over the last 4 years, but 10 years, ever since the central banks started to be more active in the markets, let's say. The money supply has gone way, way up. And so if that continues where it becomes more and more money printing, more and more erratic money printing that is responsive to any kind of crash in the markets, well, then the rate of debasement is going to go a lot higher than 7% at some point. Um, and so at that point, then 3 million in 21 years just seems a little bit unbelievable. But again, you could plug in your assumptions into this model. And if I assume that, then I could plug that in. And that's the beauty of it. That's why it's so cool because it's open source. So if I think the money supply is going to increase, plug it into the model and see what my numbers would be.
love it, love it. So Sam, we are getting to the top of the hour, and I guess I got a couple questions for you. First one is, how much do you think someone our age, right, roughly in their 30s or late 20s, uh, how much Bitcoin do you think they would need to retire?
Oh, depends on like when they want to retire, I guess. And
Let's say 10 years from now.
10 years? That's difficult.
Or let's do, you know what? Let's do traditional retirement age, right? So let's say you want to retire in your late 50s, late 60s. You're in your, mid 20s, late 20s, early 30s, mid 30s right now. What would you say? What is that number that people should strive for?
I mean, if we're talking like 20, 30 years, then we're talking about roughly what we just talked about with Saylor's timeline, right?
One Bitcoin.
And so if you have one Bitcoin that's worth $49 million, you're going to be okay. Now, the tricky part is holding on to it. This is what
Yeah.
people, and that's when it comes down to your own conviction as well as your own risk tolerance. Because I talk about how somebody who bought 10 Bitcoin versus somebody who bought 5 in 5 years, what's going to really matter is like, were you able to hold on to that 10 versus the person hold on to that 5? Maybe 5 was actually the right allocation because it wasn't a huge percentage of their net worth and they didn't freak
Mm.
out and sell the bottom because they saw their entire net worth decrease by 50%, whatever it was. The person who owns 5 are actually going to outperform the person who owned 10 because they just held on to it because it was the right position for them given their risk tolerance. And so it's really important to know yourself and understand that the most important thing in Bitcoin is to hold on to it,
Yep.
no matter how much you have, to
Yep.
benefit from the price appreciation. And like I said, with
Absolutely.
everything else I just mentioned, like a little bit goes a long way. But that idea gets amplified as Bitcoin adoption continues. So a little bit will go much longer way in 20 or 30 years. So keep that in mind.
Good answer. Good answer. All right. Final answer for you, Sam. And it was an honor to have you. Honor and a pleasure to have you back on
You
Simply
too, man.
Bitcoin. Final question. What I'm going to put you in the hot seat. We are heading into 2025. Where are we peaking, my friend? This cycle. A lot of people are saying 100K Bitcoin, 150K Bitcoin. On the bullish side, people are saying 500K Bitcoin. What would you say? What is your intuition, your instinct telling you about next year?
Man, next year? You mean like the top, like in 2025?
I'll go first. I'll go first if you want.
Yeah. Okay.
All right.
Yeah.
So I'll say 200K.
200K.
Yep.
I'll go 199.
Okay. All right.
It's like the price is right.
Maybe.
I was telling somebody that's one question where like I literally would not be surprised if it was 80K or if it was 180 or if it was 400. Like it's so difficult to understand what could happen in 1 year given the broader macro picture. If something happens and the liquidity spigots just go roaring, if a white swan event happens in Bitcoin, there's a nation state, and it's so difficult to predict, but nothing would surprise me, like absolutely nothing. And so that's literally one of the hardest questions, like looking out the next 12 to 24 months. I will say I think it's going to go higher. And I think I personally believe like 6 digits is pretty conservative, like in terms of breaking 100K. And then from there, I mean, you're just in price discovery and the amount of attention it's going to get and the major players that cycle and who's going to be, driving it. It's going to get weird. And so
It is.
from there, I mean, I would not be surprised about anything. And so if it's
Yep.
higher and I'm proved to be a huge bear here in a couple of years, I'll be totally happy about that.
Exactly.
Yeah.
Anyways, guys, thank you guys so much for tuning in. Our guest today, Sam Callahan. Sam, where can people find you?
Yeah, so you can find me on X. So I'm at Sam Callahan. I'm always posting things on there, and I also do a weekly newsletter. You can do that thenewsblock.substack.com, and so that's just a market update every week. I kind of share great charts. I work with Natalie Brunell on that. She voices it. It's amazingly talented. You can find it on audio under the Coin Stories umbrella. And then I think it's just personally, I just think it's helpful for me because I basically am always reading things, reports, surveys, articles, and I just kind of put it in one's place. So I think it's pretty useful actually because I put a lot of work into it and all the links are right there. So if you ever just wanted a real quick and dirty update under 10 minutes, the news block with all the links there where you can kind of look into these resources yourself. Check it out.
Love that. Love that. Well, Sam, thank you so much for joining me on the show. Hope to have you back on again and maybe a year from now and see how our predictions ended up. So
Yeah. Thanks, Nico, and have fun in Vegas. Always a pleasure to come on Simply, man. You guys are doing great.
Appreciate it. Thank you, man. All right, guys, that was our show. If you enjoyed the show, you know what to do. Smash the like button. Consider subscribing, and we'll be back with the live show tomorrow, 12:15 p.m. Eastern Standard Time. Until then, take care, everybody. Go outside, touch some grass, go in the sun. It feels nice. Eat some steak.
You buy bitcoinwell.com, a Bitcoin-only platform. You buy bitcoinwell.com, a Bitcoin-only platform on a mission to enable financial independence.